What's up, everyone? It's Caddy with MoneyVest. So markets here continue to somewhat stay flat to slightly drift higher on the back of continued optimism around rate cuts in 2024. And next week is going to be super important because we do have the inflation numbers coming out on February 13th, a day before Valentine's Day as well. So hope you guys are doing great and are having a fantastic week so far. We're going to break down everything related to what happened on Thursday with the markets here, and also go over some of the technicals, of course. And as always, if you enjoyed this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. The first week of the month is the best time to join, and you can also access our brand new video, which is members only private videos with my full shopping list. It's 12 stocks that I'm buying or planning to buy with my buy targets, as well as ETFs and other potential tactical trades that you can access. So there's over 46 members only videos, tutorials, lectures, fundamental analysis, technical analysis, options, and other macro portfolio updates that you can access and join if you'd like. And again, I've opened up a few more spots, and you do get access to all of our spreadsheets and the Discord channels as well, with over 20 plus channels, including trade alerts, and find out exactly what I'm buying and selling. And also do connect with me on Instagram. I do post a lot of interesting stories, behind the scenes stuff, and we do have the moneywest.com platform coming out very, very soon in March as well, for which I'm super excited about moving forward as well. Now, this right here is how Thursday kind of played out, with the NASDAQ here up over 24 basis points, S&P basically flat, Dow Jones basically flat as well. And the stock market is getting stronger. The funds strat's Tom Lee says that the U.S. economy is incredibly resilient, and the Fed has turned dovish with inflation falling like a rock, is what he also talked about. So recent data supports Lee's positive assessment of the economy. In the fourth quarter of 2023, the real GDP in the U.S. grew at an annual rate of 3.3%, according to the Commerce Department's advanced estimates, and this growth significantly exceeded economists' expectations of a 2% increase. And Lee's confidence in the stock market is further bolstered by the U.S. Federal Reserve stance after substantial interest rate hikes in 2022 and continuing into mid-2023 aimed at curbing inflation. The central bank's approach has softened as well. And Lee noted that the Federal Reserve, I think, has turned dovish. We don't know the timing of the first cut. Inflation, I think, is falling basically like a rock. Now, I do somewhat disagree that inflation is not falling like a rock, Tom Lee, because if it were falling like a rock, we would have already been at close to the Fed's target, because it's been well over 10 to 12 months here since we kind of peaked, and we're on our way down. So we're definitely seeing some level of disinflation, but it's now started to stagnate a little bit. The last couple prints have shown us more of a stagflation type scenario than a disinflation or deflation type scenario as well. So yes, he is correct in his assessment that, the GDP is super strong, the labor market super tight and resilient, and the Federal Reserve has turned dovish, somewhat dovish, but they haven't fully been convinced or declared victory just yet. And so inflation still needs to come down to the Fed's target. The headline inflation rate has indeed subsided in December. The U.S. Consumer Price Index saw an annual increase of 3.4%, down from a peak of 9.1% increase in June of 22. So in fact, it's actually been well over 12 months. It's actually been closer to 18 months, 18 to 20 months since our peak. And we are still, of course, nowhere near close to the Fed's target. Lee does not speculate on when the Fed might start lowering interest rates and believe the timing is inconsequential. I think that the stock market really should just care that the Federal Reserve has gone from fighting inflation and almost giving the economy a heart attack to one where they're trying to manage the business cycle. So if they don't feel comfortable doing this cut in March and instead in May, I don't think it should have any effect on equities and how they do today as well. And there's definitely some truth to that. I want to highlight that, okay, from March to May doesn't really make much of a difference. I mean, the Federal Reserve is going to cut regardless, sometime in 2024. However, the bigger question is inflation really on its way down to 2%? That's the real question. And that's what the Federal Reserve is also asking themselves. Jerome Powell mentioned that they need greater confidence, right? They need greater confidence that inflation is on a substantial path lower, down to 2%. Now, if inflation starts to stagnate a little bit and then starts to reaccelerate back up, that's going to be a problem for not only the markets and for the economy, for also the Federal Reserve, because that's the last thing they want to see, because interest rates are already about as high as they can be right now. Of course, they can go higher. Nobody knows the future, but the bottom line is that they're staying at these levels. They're not going any higher because inflation is indeed trending lower. However, it needs to keep coming down in order for the Federal Reserve to feel that greater confidence and start lowering interest rates. So Yes, while the timing may be inconsequential, the real question is rate cuts actually going to even happen and take place or not? Or is the Federal Reserve going to start feeling a little bit wary of where inflation is moving back up or not? $6 trillion on the sidelines. Now, this right here, of course, is a huge catalyst for more money that could potentially flood back into equities. However, I do think that given how high the price to earnings multiple and how high the markets really are and the earnings yield being really low, that $6 trillion sure has better opportunities and alternatives from a risk-adjusted standpoint, because the earnings yield on the S&P 500 sub 4% versus the 10-year treasuries that are still hovering and flirting around the 4% range definitely does suggest that, okay, even though there's a lot of money sitting on the sidelines, does it really have the potential to flood back into equities or elsewhere? In my opinion, it's going to be the latter, because there are opportunities on a risk-adjusted basis that are better than stocks at the moment, given how high the markets are. Now, when interest rates are high, the investors are drawn to money markets due to their appealing returns. However, Lee contends that these returns are modest compared to the gains from stocks, pointing out the S&P 500 in the last 6 weeks generated more return than the entire year of owning money market cash as well. And that is true. Again, if you look at the last 6 weeks, the markets have done really well, but it's not about what the markets have already done. It's what the markets are going to do in the future that really dictates the decision making for investors. And given how high we are, again, the idea is, can the markets really, continue to move higher and drift upwards without seeing a bit of a pullback? But I do think that there is some possibility for pullback or a little bit of a correction in the markets that's been long overdue. And even Tom Lee, I think, mentioned that markets can see a 6 to 7% correction moving forward because of how high we have pushed higher, right? So I think even Tom Lee mentioned that. But Google here pushing up, Meta pushing up, Amazon, Apple down, Microsoft basically flat. The entire market was kind of like mixed a little bit. We did have some sectors obviously pushing higher, some sectors rolling over. In the last 1 week, again, it's been a little bit of a split market. In the last 1 month, again, it's a bit of a split market with technology, comm services, industrials all pushing higher, with materials, real estate, and utilities selling off. And in the last 1 day, of course, we have cocoa prices pushing up, and everything's been basically flat or slightly down, with orange juice and natural gas also rolling over. Bitcoin here with a very nice move to the upside, almost at 46,000, and Ether just over 2450 as well. So going over to the markets here, crude oil, once again, seeing a big spike of over 3%, back up to over $76 a barrel. We talked about this being a very important level of support for crude oil. So we're kind of bouncing off of that level, and resistance is going to be all the way up to this resistance and this target at $81 a barrel inside this red rectangle. Volatility here continues to be a little bit more muted. So again, we are under 13. We continue to kind of come up to 14, 15, and then get crushed back down. And this right here inside this red rectangle, very important level to watch and to pay attention to at around 12.7, closer to 13 on the VIX as well. Bitcoin, on the other hand, continues to make a recovery very nicely, coming back up to that $46,000, $47,000 level. And so a lot of these stocks, a lot of companies like the Bitcoin miners like Marathon up over 8%, 23% yesterday, up over 8% on the day today pre-market. Riot up another 7% pre-market right now, and of course a lot of other individual stocks related to Bitcoin are pushing higher as well. So if you take a look at iBit, which is going to be the iShares Bitcoin Trust, very strong rally, 3% yesterday, up another 2% pre-market today as well. And Ether also pushing back higher to 2467 as well. So very nice recovery back up. Now I may actually have a Bitcoin play for us. So again, if you want to get access to that, link's going to be down below. I'm going to be sending out an alert today or most likely next week, where I do pick up some shares of a Bitcoin ETF, spot Bitcoin ETF of the 11. I'm going to be doing some analysis, and I will be sharing the alert down in the Discord. Again, link's going to be down below if you want to join, and of course access everything over there as well. Now going over to the S&P 500. Now one of the clearest messages that I can provide you is that this is the type of market that sucks up all liquidity. Okay, this is the market that creates that greed, that creates that cycle, that whatever you throw money into is going to make you money, because everything is pushing higher, everything's on this rally. And again, if you take a look at semiconductor stocks, they've been pushing higher. If you look at technology, everything's just been ripping higher. So this is that market that kind of makes you believe that markets are easy. That's a very important understanding that I need you guys to understand, is when you start to feel the markets are easy, that's when there's something wrong with the market. Okay, because markets are never supposed to be easy. So the moment we start thinking that, oh, it's so easy to make money in the markets, whatever I invest in goes up, this is easy. This is like, why aren't more people doing this? That's when you know this is a market that's going to be tempting. It's going to be becoming more and more greedy. It's sucking up all the liquidity. It's kind of drawing you in before what happens, right? Before we start to see some profit taking, some pullback, and some corrections. So move cautiously, right? I'm not saying that you can completely ignore the markets and let it push higher and higher. Of course, this is a market where I'm looking to sell calls. I'm looking to maybe dollar cost average some of the more broader base ETFs and a little bit, right? So slowly and steadily kind of dollar cost averaging, so it doesn't move my cost basis all that much. But yes, when it comes to individual stocks that have already been rallying harder, I'm not starting new positions, or I'm not going heavy in hopes of making more as this rally continues, because yes, it could continue, but the risk reward is very much tilted. It's very unfavorable right now considering how overbought we really are. So right now I can confidently say that markets are indeed easy, and when they are easy, it's usually not the time to be looking to invest in, because when the markets are hard, when it's difficult, when you actually feel the fear, that's when it's more prudent to be looking at deals, and the risk rewards are far more favorable in the markets. NASDAQ here, up over 24 basis points on Thursday. So next resistance and target is going to be 16,200. So that is going to be that level to watch. And of course, we continue to see that RSI a little bit more elevated. MACD also just moving sideways, and we continue to move upside as well for the markets as well. Now talking about Apple here, and Apple also just moving sideways a little bit. Resistance is going to stay up at a 189, close to $190. So this right here is going to be that level to keep in mind. Support level is going to stay put down to $180 per share. And of course, I would be a lot more interested in the 160s for Apple to dollar cost average into. I'll be a lot more aggressive at those prices for Apple moving forward. Talking about Amazon. Now Amazon, I do got covered calls at 170, and we're kind of just hovering around those levels for Amazon at the moment. And resistance is going to be all the way up to 176 for Amazon. So that right there is going to be that level to watch as a resistance. And of course, support level is going to stay put down to 155. And we also do have this area that we need to watch, this gap that may or may not get filled for Amazon. That's going to be sitting somewhere between 160 and 167 for Amazon. And resistance and target, like I said, it's going to stay put at 176 for Amazon. Talking a little bit about NVIDIA, and NVIDIA here on the day, pushing down a little bit over 65 basis points. It's a little bit under $700 after hitting a new all-time high of 707. We are just insanely overbought and overextended right now, and support level is going to stay put right over here, all the way down here, sitting roughly in the 500 range for NVIDIA as well. So just got to be super careful. I mean, this entire breakout for the ascending triangle has not been nothing but absolutely insane with a 50% rally. And of course, we are incredibly overbought, as I've already mentioned. Advanced Micro Devices, on the other hand, just continues to trade sideways. We are consolidating a little bit, and support level is going to stay put down to 157, 158, with the resistance all the way up to 184. And of course, a much stronger support down here in the 130s for AMD as well, down to as low as those moving averages. And of course, this area of support in the low 100s, again, 97, close to 98, $100 range is also something to keep in mind for Advanced Micro Devices as well. And also talking a little bit about Tesla. I've got a video coming out on Tesla later today, so we'll be covering that stock in a little bit more detail. But this right here is the entire analysis where we are seeing a little bit of a bounce back higher for Tesla. Support level is going to stay put down to 179, close to $180. And again, 1% in the green on Thursday. We've got that resistance and that target up to $200, $215 per share, all the way back up to $247, $250 for Tesla as well. So this right here is the overall downtrending channel of lower highs and lower lows. So this is exactly how we've been trading for Tesla, and that next target and that resistance is going to stay put right over here at close to $240 per share. I will be looking at selling some calls for Tesla here just to generate some cash flow and some premiums. So that is an alert that I will be sending out in the Discord later today or early Monday before the inflation week. So again, look out for those covered calls. I'm looking at strikes between 230 and 240 because that's where the resistance and the target is going to be for Tesla moving forward. So next one on the list is going to be PayPal. PayPal obviously struggling quite a bit with a huge breakdown from this support at around $56, $57. And next target, unfortunately, is going to be down to $50 per share. Again, I did a video going over PayPal, beat on EPS, beat on revenue. I feel like the numbers overall were pretty decent. Guidance was obviously a little bit of a on a softer note, but overall, I think the numbers were pretty solid. Fundamentals continue to be pretty resilient, but the stock price is struggling a little bit. Sentiment's really, really weak, continues to sell off on earnings pretty aggressively, down about 11%. So next support and target is going to be in the low 50s. This is already a bit of a breakdown and a little bit of a gap that it may or may not fill eventually. And resistance is going to be $65 for PayPal. Visa, on the other hand, continues to rip higher to new all-time highs, but a little bit of a pullback on Thursday, down about 1.2%. That 21 EMA is going to be that support at close to 271, and if we do end up seeing, let's say, a breakdown below this, next support is going to be $249, $250 per share for a Visa as well, but a very nice consistent uptrend of higher highs and higher lows as well for Visa. Talking a little bit about Meta platforms, and Meta here continues to push higher. 470 is where it's at. Very nice consistent uptrend of higher highs and higher lows. And of course, just ripping higher to new all-time highs. This is a gap that Meta will eventually, in my opinion, fill in, considering how high it's been from an RSI MACD standpoint. Very, very overbought. So support level is going to stay put down to 384, down to as low as 355, to as low as this green rectangle in the 330, 315 range for Meta. Netflix, on the other hand, starting to roll over a little bit from that resistance of 571, 572. So this right here is going to be that very, very important level of resistance. Support level is going to stay put down to 493, close to $500 per share for Netflix. And this right here, of course, is going to be the gap that eventually will get filled. Eventually may or may not get filled. Actually, 9 out of 10 gaps do get filled, but 1 out of 10 maybe don't. But this right here is going to be that gap to keep in mind. Support level is going to stay put down to 485 to 496 for Netflix. Google here, on the other hand, also seeing a little bit of that recovery back up over 37 basis points. Support level is going to stay put inside this 140 to 144 range, and resistance back up to over 150 for Google as well. So that is going to be that next target and that next level to keep in mind for Google. And then finally, we got Microsoft, Enphase, and Costco. Microsoft pushing higher a little bit over 1 basis point, so basically flat, but pretty much trading at an all-time high. And support level is going to stay put down to $384 per share for Microsoft, all the way down to $366 for the company as well. Lots of consolidation, very much within the context of this uptrend of higher highs and higher lows, and pretty much at an all-time high with an overbought RSI and MACD as well. So got to be super careful with Microsoft. And of course, a lot of companies that are trading at an all-time high with very overextended RSIs and MACDs. Speaking of, Costco is another one that continues to move higher at over $724. So a little bit of a rising wedge pattern. So that is the only thing that kind of concerns me a little bit about Costco as well. And then finally, we got Enphase, ENPH, that of course is seeing a little bit of a pullback down 54, 55 basis points. $116 is where it's at. Again, this is going to turn into a support. I did sell some calls on Enphase, 130 calls that are actually up close to 16 to 24%. And I will be looking at closing them out at 65 to 70% profit. Again, if you want to get access to all the option trades, link's going to be down below, and we'd love to have you on board as well. So hope you all enjoyed this video and a complete update on the entire markets. Next week is going to be big inflation week, and make sure that you drop a like on this video, subscribe to the channel. Definitely do check out my Instagram handle, is going to be CastWRP, as well as the private members only videos that you can access with my full shopping list with my buy targets that are also going to be available. I did open up a few more spots if you're interested in joining us, and as always, happy investing. I'll see you all in the next video.